Our next speaker is Kurt Leber. He's been 13 years with the USDA. He started as a farm loan officer and then a farm loan manager, and now he's the district director for Northwest Ohio. He has a BS in agricultural education from OSU, lives, works, and operates on the family farm with his father and his brother. They grow corn, soybeans, and wheat. And he will be speaking about the Beginning Farmer and Rancher program. He's the representative for Ohio FSA. Kurt?
Hey, thanks for the introduction, Tia. And just a moment here while I share my screen. All right, and hope everybody can see that. Somebody confirm that it's up.
It's up.
Yep, we can see it.
Great, thank you. Like Tia said, my name is Kurt Leber. I'm a district director with the USDA's Farm Service Agency. I oversee farm loan and farm program administration in Northwest Ohio. So today, I wanted to talk to you just about USDA programs, specifically our farm loan programs. First, I want to thank Marcus for a very thorough and good explanation of the financial foundation that all lenders really look at. So to build off of that, I'm going to get more into what we do as I get through my slides, specifically with our programs. But I wanted to touch on a few things first. When getting started with the USDA, we have over 2,100 county offices across the nation. Every county is serviced by a USDA service center. So if you want to find out how to contact a local service center or your state beginning farmer rancher coordinators, farmers.gov is an excellent resource for that. They actually have a new farmers page there, and you can search through a lot of that information. You can find USDA service centers by the easiest way is you go to a Google search and just type in USDA service center locator, and that will pop up, and you can type in your area, find it by county. And you know, although you may think you're only interested in financing right now, it's always beneficial to connect with the various USDA agencies and see what programs, financial assistance, technical services might be available to you. So we're going to put a lot of focus on our FSA loan programs today, but I also want to inform you about the other USDA agencies at the end and maybe some other programs that we offer through Farm Service Agency that might be beneficial. But first, I want to hit on a couple of definitions. So if you're new to USDA, you very well may fit the definition of what we call a beginning farmer. Many people think that a beginning farmer is identified by age, but with USDA, it's not. You look at the years you've operated a farm. These designations define rules for participating in programs as well as priority or pools of funding for other USDA programs. Some agencies have a slightly different definition of beginning farmer, or they prioritize their pools a little bit differently than Farm Service Agency. Like for example, NRCS is EQIP program. Some of you might be familiar with that. It doesn't give women extra weight in terms of competing for funding, but it does for beginning farmers. And for loan purposes, we designate funds for those who identify as beginning farmers and or specifically socially disadvantaged applicants. And again, here's a veteran rancher or farmer definition as well on this slide. This is important because we have a program I'll talk about here in a minute, our down payment program that the 2018 Farm Bill expanded to be available to veteran farmer and ranchers as well. And we look at a 10-year period there for veteran service. So when talking about what FSA offers, I'm going to say this a few times, but the first thing you always want to do is connect with your local FSA office. They're going to be really the ones that are going to be able to help you move through understanding what's best for you. We have a lot of programs nationwide. They cover a variety of instances and operations needs. So it's really stuff that can be tailored to your own operations. But we do have two main categories of offerings. I mentioned before, farm programs and farm loan programs. Farm programs include disaster assistance for all types of producers, can help farms recover from natural disasters or when there are serious economic disruptions, the pandemic being one of the more recent examples of that. Conservation programs are available to provide financial assistance to address farming and ranching related conservation issues, including drinking water protection, reducing soil erosion, wildlife habitat preservation, restoration of forests and wetlands, aiding farmers whose farms are damaged by natural disasters, things along those lines. We also have some safety net programs. Those are typically to provide payments when actual crop or commodity revenue decline below maybe a threshold price. We have like a dairy margin coverage program, which is the first one that comes to mind there for dairy farmers. Risk management programs, we use those to assist to prepare for and recover from unexpected, whether it typically runs more like an insurance program, I'll say that, or risk management when I hear that. So we also have some outlier programs that help cover the cost of organic certification. We have low interest loans for commodity storage, whether it's anything from fluid milk to produce. And then we also have, like I mentioned, a variety of loan programs. And we use those to meet a variety of needs. It could be for improvement projects, expanding an enterprise, getting started, or purchasing a farm. And we're going to dive into those a little bit deeper here as we move forward. Farm loan programs, we like to say, they open the door for many beginning farmers and veterans to get started farming. Just real quick, I'm not going to go through all of these, but this is just a small cross section of some of the programs that are offered. But at the top here is listed crop acreage reporting. It's one of the foundations of our programs for the entitlement programs. And typically the crop acreage reporting deadline is July 15th if it's hay or pasture or row crops. But for specialty crops, produce and such, where there may be multiple turns during a year, we're encouraging those producers to stay in contact as necessary when planting is done to report their crops so that we can get those dates properly recorded. So FSA eligibility and progressive lending, now it's called. So you're going to hear me use progressive lending and supervised credit interchangeably. We used to call this supervised credit. We've just changed the vernacular here in the last year or so. But FSA works one-on-one with our applicants to develop and their projects, or maybe not their projects, but develop their cash flow projections and help hone those. We use a lot of the information Marcus talked about to help determine what we call creditworthiness, the ability to repay, evaluate the farm business. We supervise the operations through the loan process. The applicants and borrowers will maintain good and frequent communication with their loan staff. Your loan officer is going to work to create the best solution for you in terms of payment schedules, accountability, loan terms, disbursement of funds, those type of things. Our loan staff can also provide technical assistance and can answer questions, but it's important to understand that the borrower is ultimately responsible for the success of the operation. So we don't want to tell you what to do, but we want to know what you want to do and help you make that a reality. So FSA staff, if necessary, will help you with filling out your application and applying. So I encourage you to take advantage of that assistance. Be realistic. Like Marcus had said, be honest, be detailed in your description of your personal farm finances, your business plan, your expenses. Decisions are made based on the information that you provide. So, it's important to know the true outline there. That way we don't put you in a position where you may not be able to succeed. So many loan officers might actually recommend starting small and scaling up, depending on what your starting point is. So here's some general eligibility requirements. Again, not delinquent on federal debt, managerial ability, and demonstration of that can be through actually operating yourself, or we can utilize, depending on the loan program, we can utilize participation in some of the programs that are out there for either education or the incubator programs that are out there. So those are just things. Again, talking about realistic business plan. So we look at the whole, or we call it a global financial picture. So we look at gross farm income and expenses. We look at owner withdrawal, which is cost of living. We look at your off-farm income, farm and personal debt payments. So we look at everything, and we want to see if all things considered, if you're able to make it work at the end of the day. So if you're not looking at a global operation cash flow, a lot of times working with beginning farmers, it just simply won't work. We got to have some sort of off-farm income a lot of times to help that out. Collateral for a loan, we get pretty liberal with that. We can go secured up to 100%, and we can typically make it work. So the goal is really to get people into the program and help them work through what we call the progressive lending operation, which is to get you to a point to where your operation is capable of obtaining commercial financing through someone like a farm credit or an ag credit or whoever that may be, or another commercial lender that might suit what you're doing. So we have operating loans that are available for up to 7 years. We have farm ownership loans, and you can obtain farm ownership loans for 10 years after you've obtained your first one. And we talked about years of experience. Typically, depending on the type of loan, if it's a farm ownership loan, we look at trying to document 3 years of management decisions made somehow or another. If it's an operating loan, we can get into a 1 year deal, or micro loans, we can get into even more liberal outlines than that. So again, as I mentioned before, FSA, we consider that to be the lender of first opportunity. Our goal is to help you grow and graduate from supervised or progressive lending to conventional lending. So you're going to work very closely with your loan officer. It's like typically a commercial lender is going to make the loan to you, maybe check in once a year, that type of thing. With FSA, we're checking in as much as necessary, and we're encouraging our applicants and our borrowers to communicate with us very regularly. So again, we try to encourage that open and honest communication. We look at the 5 C's of credit: character, capital, collateral, market conditions, and capacity. We don't make approval decisions based solely on credit score. We don't really take that in. We take credit into consideration, but not the credit score. But it is important to try to maintain good credit history. To the specific loan programs, we have direct farm ownership loans, which we can term out, and direct farm ownership loans are used for farm ownership, just like they say they're land purchases, maybe land improvements, buildings, that type of thing. We can term those out to up to 40 years if necessary. We can do a maximum of $600,000 on those. Direct operating loans. So we have 2 different types of operating loans. We consider term operating loans, which would be for what we call chattels, which is equipment or livestock, things that are going to have a useful life of up to 7 years. And we can term that operating loan out for up to 7 years there. And then we also have annual operating loans, which are for inputs, fertilizers, seed, that type of stuff. We can do 12 months for annual operating. We can go up to 18 if necessary for the term of the production. And those are capped out at $400,000 limits. We get into the microloans. I mentioned microloans a little earlier. We can also do farm ownership and operating loans under the microloan program. Those are capped at $50,000. So for the farm ownership loans, we can go 25 years on those, up to a maximum of $50,000. and the OLs are still at 7 years, or 1 year to 18 months if it's an annual operating microloan. Again, the benefit to that, there's a little bit less paperwork involved with a microloan being a lower amount, and also some more flexibility and eligibility. And that's a good program there for a lot of beginning folks that are just trying to get in and figure out. So you can obtain a microloan OL and a microloan FO separately and have $100,000 in total debt under the microloan program. Guaranteed loan programs, just hit on those quick. We work in tandem with the farm credits, the ag credits, the commercial lenders of the world, and we basically back up their credit to commercial lenders. Right now, that guaranteed limit is $2,077,000. That just got updated. And FSA can actually back up loans up to 95%, meaning we'll take up to 95% of the risk out of that loan if we can encourage commercial lenders to help with making those payments, those loan payments. And then we have the Beginning Farmer Down Payment Loan Program, referenced that earlier as well. So how that program's structured, it's strictly a land purchase program. It calls for a minimal 5% cash down payment from the applicant. FSA finances up to 45% of the loan request, and we bring in another commercial lender to finance at least 50% of that program. The real benefit to that program, FSA's portion of the loan is financed at 1.5% fixed interest right now at a 20-year term, and the commercial lender is held to a 30-year amortization at their rates right now. So again, some information just kind of went over there on loan limits, etc. So operating loans, we can use those, as mentioned before, equipment, livestock, production expenses, refinancing, 1 to 7 years, $400,000 limit. Farm ownership loans are for land purchases, capital improvements, on water conservation, longer terms, longer than 10 years, 10 to 40 years, we typically say, and again, limit of 600,000. And recapping once more, microloans, and I won't read this whole slide to you, but we've seen the benefits of those for beginning farmers. These have a very high rate of participation. They've been extremely popular. And again, guaranteed loans, again, we can handle just about everything we want. With a commercial lender once with a producer, and like Marcus had mentioned, at-risk production is a big thing for us when we determine eligibility. The loan rate is determined by the lender, not FSA. The lender is actually FSA's customer. The borrower works directly with the lender and not FSA. And again, the beginning and underserved farmers can get up to a 95% guarantee. I noticed we had October 1st, we had the increase, and you can see what the increase was. It's a $2,077,000. It used to be 1.8 million, 1.825. It's a significant increase year over year compared to what we have typically seen. And of course, that's due to inflation. Back to the down payment loan program. So again, this is designed to help with beginning, veteran, and SDA farmers. Terms are a little bit different. Like I mentioned in the direct farm ownership loan program, we do require a 5% minimum down payment with this, where our other loan programs that are not under the down payment program, we don't require any down payment. FSA's portion, again, 1.5% fixed. We have a maximum, the 45% of FSA's contribution cannot exceed $300,150, which is the percentage of the $667,000 maximum. And our limits are capped at 20 years as opposed to 40 on the regular loans. We go up to 45% of the loan purchase, again, 50% by the commercial lender, and the lender uses their own rate on that 30-year deal. And I wanted to cap off here just by going through a couple of other agencies that are under USDA within our own entity. So the first is Natural Resource Conservation Service. They're the ones that are going to offer the technical assistance when it comes to conservation. They're kind of the boots on the ground folks. They come out to the farm, they help you identify and address environmental and conservation issues. They do have some financial assistance programs. We work in tandem with them on a few of those. And if you have livestock, they're a big deal. They also get involved with the High Tunnel Initiative. Does not require a large amount of acreage. It assists with extending the growing season if you're not familiar with that. That's done through the EQIP program. That's a competitive program, and if you meet the definition of beginning farmer, then there are incentives and priorities associated with ranking in the funding process. So it's good to have a strong relationship there with your NRCS staff as well. And as I mentioned before, they also have a presence in every county. So and farmers.gov is the place to find those contacts. Risk Management Agency. They're not a forward-facing entity, but they do handle a lot of the background stuff with what's called the Federal Crop Insurance Corporation program, and so there's insurance agents, crop insurance agents that that actually administer the programs that RMA underwrites. And then rural development, this is actually a forward-facing program, a public-facing program. They offer direct and guaranteed loan programs like FSA does, but their focus, FSA offers loans directed more towards production agriculture. Rural development provides funds more for building or constructing homes in rural areas, or businesses, rural businesses that are eligible for their financing. A couple of the most popular programs that they do have is the Value Added Producer Grant Program and the Rural Energy for America Program. You might also heard that called REAP. The Value Added Producer Grant Program is a competitive grant that's available to producers who are doing value added to their products, such as growing tomatoes to make salsa, grapes for wine, berries for jam, all that good stuff. REAP is for making energy improvements such as like geothermal heating and cooling, LED lighting, that type of stuff. It's not designed to assist with new installation, but to upgrade into more efficient operations. And then the last one here I'll touch on is Ag Marketing Service. They support your local markets. They provide local food and farmers, market promotion grant funds for the development of local markets. They also have price support data and many other resources online. A lot of times the State Department of Agriculture administers programs on behalf of the AMS, and typically the State Department of Agriculture is your local contact with those folks. And lastly, I just want to talk real quick about networking, and anybody that's here today listening in, you're well on your way. You want to surround your people with folks who share your passion. It's invaluable. Networking is important, especially if you're new to farming, trying to get connected with various resources. There's a lot of opportunities for networking with different groups locally and within the state of Ohio here. And you're connected with a few of those good ones here today. And I just listed a few things on the side here for some ideas, good places to start for that. So with that, I will take any questions.
Awesome. Thank you so much for all of that great information, Kurt. We do have a few questions. First question, are you able to purchase a farm not in production that already has a home on it if you plan to put it back into production?
Yes. That's a good question. We don't get into buying just houses. Again, that's typically the rural development arena, but we do buy farms that do have rural residences on them or houses that have production land attached to it as base operation. So that's something we can look at.
Awesome, thank you. And also, can you share your slides?
I sure can. Yep.
Okay, we have a few more minutes. Does anybody have any, if you have any other questions, please drop them in the chat. Again, Kurt, we really appreciate you coming here and providing all that information on the Begin Farming program that you coordinate.
You bet. Thanks for your time.
Thank you. I did have one quick question, Kurt. I heard you mention, like, with the rural development with the RD loan, you said if you want to construct a new home, is this a new rule? Because, like, I know 10 years ago we got a rural development loan for our property, and obviously it was already, the home was already here. And there's also a lot of, rules that surround that too. But so is that a new rule, or?
That's a good question. It's not really my area of specialty with rural development, but I do know that they offer, existing rural housing loans. And they do construction loans. I'll just say this, with anything construction, USDA gets involved with. There's a lot of environmental inspections that need to be done. Not necessarily a big deal. It's just it's another step to consider when going through all that. They'll need all the plans, all the drawings, all the specifications, detailed quotes, and those sort of things. Typical that any lender would need. But I can't speak to the specifics of that program, but I do know that they will, in certain instances, finance new construction.
Okay, great. Thank you, Kurt. And one more question. Are you able to purchase land for an off-grid community that would also have a farm on it?
So, like had been mentioned before, we lend to people who are in production for profit. So, depending on who is actually coming to us and applying for the loan, we really can't. It's actually written into our regulations that we can't lend to FSA can't lend to nonprofits. There's some legal issues with doing that and securing the loans and such. But anyways, it would, I guess, in that situation, I'd have to know some more about the specifics, who would be applying, what exactly their operation looks like, and what the end goal there would be.
Okay, and one last question. Are there any places to research types of crops that are in scarcity that are needed by the government?
So your best place to go when looking for those type of answers, honestly, is your extension agents, your Central States, your Ohio State extension agents. They are a wealth of knowledge when it comes to what local markets look for, what works best in certain areas. Our folks, we can help a little bit in that arena, but we really try to shy away from that part of the assistance, just because we don't want to push somebody one way and it not really work out that well for them for whatever reason. We want this to be your passion, your program, your investment into it, and we can help you form it around your ideas. But if you're looking for somebody to help with that, your extension agents are fantastic.
Awesome. Thank you so much, Kurt, for being here. We really appreciate it. If you don't mind dropping your information in the chat so that if people would like to contact you, we'd appreciate that as well.
I sure can.
Okay, awesome. Thanks again.
Thank you.
You're welcome.